NASDAQ's down 3%. S&P's down 2.8. I mean, it is a bloodbath out there. Markets are not loving this. You've got S&P 500 at this point. At the time of recording this, we are about 15% off the highs. At one point, we were down 15.6. Absolute turmoil out there. I was discussing the benefits right now of a diversified portfolio. For those of you guys who said that you do have, investing portfolios, 401ks, etc. 6 months ago, it felt foolish to have anything except technology in your portfolio. Now, if you have things like gold in your portfolio, if you have things like bonds in your portfolio, if you have international stocks in your portfolio, suddenly you feel like a hero. Now, a relative hero, because most people's portfolios are down pretty good this year. But you got to remember, if you're like all technology, this is XLK, it's a tech sector ETF. You are looking at, let me just give you some context here. If your full portfolio was technology stocks, you are currently looking at a drawdown of 23%, right? So just some context is like, if you have a diversified portfolio, there's a good chance you're not down 23% this year. So just something to think about, right? There is always something to put into perspective here. Is if you were super leveraged long the NAS right now, then yes, this is a painful experience. But for those of us who have done this crazy ride before, right, sell-offs that occur seemingly just so quickly, so precipitously, the benefits of not using leverage, the benefits of spreading out your trades and investments, right? So here's the thing is, I was long gold for a good part of this year. I had a couple good winning trades on gold. I'm no longer in it, but I'm looking for an opportunity to get back in. So we've had this really big push up here. I'm looking for a pullback. Yesterday, I was looking for an entry on gold, but I was talking about, just before we had the stream issue, we had the conversation going about how, there's two types of people, I would say, when it comes to what they choose to trade. Some people prefer to go for like the underperformer or the lagging things. Like, you might be looking at this market and say, from a trading perspective, I want to be long the NASDAQ because I'm getting more value there, right? There's different types of traders. I'm not saying this is right or wrong, but some people are saying I'm getting better prices on the Dow Jones and the NASDAQ and the S&P. These things are down. I want to be a buyer of those. And then there's traders like myself, more momentum focused. I want to be buying the winning asset, right? Whatever's winning right now, I want to be trying to constructively trade that momentum, right? From a trading perspective, that's how I approach it. From an investing standpoint, it's actually the opposite for me. From an investing standpoint, I like to buy stuff that seem kind of forgotten, undervalued, and have potential to rebound. But from a trading perspective, right, I like to trade the relative winner. And the relative winner right now is gold, right? The gold looks attractive to me. In 2020, can I just give you an example, right? So I equated, or I compared this sell-off that we're seeing right now in markets. The trajectory is very similar to what we saw in 2020 for stocks, right? So stocks just straight nosedived in 2020. They're doing the same right now, right? NASDAQ's getting crushed. Let's look at gold during 2020, right? March 2020, all, HE double hockey sticks break out to the downside. Everything sells off, including gold. Gold saw a pretty quick sell-off. But remember, we just got done discussing how the S&P 500 did 30% down really quick in 2020. Well, gold moved lower initially, but it very quickly took the leadership role, right? Fears around recession. Oh, the Fed's going to print so much money. So much currency supply is going to get introduced. It's going to be bullish for gold. That was actually a phenomenal call if you got bullish on gold at that time. Gold was trading under 1,500 an ounce, right? What's it today? 3,100? My point is, it doubled, right? It doubled. And so you may say, well, gold looks so stretched right now. Well, maybe it's so strong for a good reason. Maybe the good reason is we have so much uncertainty about what's happening. Maybe we looked at the economic heat map yesterday which by the way, let me not miss NFP because we have that starting in just a second. I'm going to pull up the NFP data here coming out in 1.5 minutes. Let's talk about this economic data in just a second with the context of jobs data. This is critical. If you get a jobs print that's ugly today, my opinion, look out below. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. I'm not making any quick action scalping decisions off of that. I'm sure there are many traders who are, but that's not my style. But I am going to watch NFP here with you guys. We've got S&P 500 just cratering here, trying to put in a low. We'll see how this all plays out. We got 1 minute to go before the NFP report. Guys, we did an extra long stream. I know we got cut off here a little bit ago. Early stream here this morning, trying to cover all this stuff. If you could do me a big favor, just as we come into the news, hit the thumbs up button on the stream, subscribe if you're new to the channel. Hopefully I can help you out to some degree in all this market chaos, and just share something. So maybe you make one less mistake than I did in my trading journey. That's the point of my channel. So we're about to go into this key economic data point. Buckle up, be careful out there, trade safe, and we'll go ahead and do our breaking news. Okay, NFP report drops in 15 seconds. This is going to be key jobs data to show whether or not all of the recent tariff stuff has truly started to impact the labor market or not. Coming in about 5 seconds, we'll see one of the more notable pieces of information, I would say, for the current economic landscape. Let's take a look. Stocks initially higher here a little bit. 228. Okay, that's a strong jobs print. Canada came in weak. 4.2% tick up in unemployment rate. Slightly better than better than expected jobs print. That's a nice number. 4.2%, not great. Average hourly earnings came in line with expectations. Popped initially on the markets, but I think that unemployment rate at 4.2% ticking up kind of mutes the positive there. They also just revised the numbers down for last report. So I would say that this gives you kind of a mixed NFP report. That'd be my summary of NFP in a split-second decision. Let's recap this. What do we just get with jobs numbers? Well, we got 228,000 jobs created compared to a forecast at 137,000. That is a better than expected number for the NFP report. But then they revised previous reported numbers down, right? So last month's reported numbers got revised lower. So this is negative, right? This is positive, and then this is negative, right? Unemployment rate came in higher than expected. That is weak for the US economy, right? So we'd say weak, strong, weak, and then we'd say neutral for average hourly earnings. So what are we looking at? We're looking at a mixed to slightly not great NFP report. This is a good jobs print though, and 4.2% is not threatening. So I'm just gonna label this a B, right? It's not a B plus, not a B minus. I'm going to give this NFP report a B. It's not an F, it's not an A, it's a B, in my opinion. Let's take a look. Market reaction, again, pretty muted. Not going to be, in my personal opinion, a massive save the day event. Had you seen unemployment rate stay steady and revisions not happen, and this number come in, I'd say that could actually be a nice kind of cushion to the fall that we're having today. But I don't know that this really offers you much resolve in the form of a safety net here. So how's this economic data looking after all said and done? Well, you're going to have, once this data updates within the Edge Finder, this is going to go blue, but then this is going to go, where's our unemployment rate? This is going to go stay red, right? So red, blue, not going to really change too much. Wage growth coming in lines with expectations. So the overall summary on the economic heat map is going to kind of remain US dollar bearishness still seems to be the norm right now. Let's take a look at the dollar just in reaction to this. You've got dollar index slightly lower. That's telling you, again, not a super promising report. Gold kind of mixed here, and we have oil prices continuing to be on the decline. Slight modest bounce back in response to this NFP report. I want to look at what institutional money's doing. Are they buying or selling? We looked at this last week. This is another reason, guys, I did not go buying more indices. Look, the institutional data warned us big time. COT data showed us net selling was big time from NASDAQ, S&P, and Dow Jones. So again, I think we have to be adaptable. You guys might be hearing me say, you might be like, this dude, Nick, was literally bullish on indices like a week and a half ago. And you'd be right. But I'm not above when it comes to, I'm here to, at the end of the day, I love trading, I love investing, but I'm also here to make money. And at the end of the day, as a trader, as an investor, I have to call what I'm seeing. And that's another thing that the Edge Finder does so exceptionally well, is it helps me to keep my bias out of it, right? The Edge Finder just looked at that COT data and like a robot, like a machine with no emotions, it said, oh, yeah, no. We had to be careful with the COT data, right? The COT data is showing a huge amount of selling. Okay, factor that into the score. No more indices. The big headline here this morning is, of course, that, we saw the Trump announcements of tariffs, and in retaliation, China has slapped back the same tariff on US imported goods. We see the market's reaction to this is very ugly. We see basically, Kenzo, there was this, okay, here comes the big news event where Trump announces the tariffs. And then we all stood and looked at each other like, what are the other countries going to do in response? Well, China is, of course, a rival to the United States. So they quickly took kind of a aggressive response to the tariffs, and we see markets lower. Do you think this has room to keep going down? What are your thoughts on all this?
Yeah, I think it's on at the moment it's a bit confusing, little bit. But if maybe we can check history, not really far, the time US and China had some trade tensions, we started to see these indices going, seriously going down. And I think even last week, I think it's this week, we did talk about that actually, mostly when we have trade wars and stuff like this, because actually tariffs is like trade war. So mostly the stock market will suffer. But what Trump did, it's like extra. I think it's way, way extra, because doing that at the same time, doing like to every country, you can do it for some country and keep other ones as your friends. But if you do like everything, it's like we no longer have friends. It's just something like that. So it's seriously bad. And some countries, they also want to show their boldness, or obviously they can't just be submissive. They will actually try to retaliate, especially like China, maybe India or the other ones. Also, I saw Europe, they're also preparing some. So that makes it worse, because that creates panic, even though maybe at the moment we don't really get that bad effect currently, but just that risk, or let's say those emotions that we see going on at the moment, they're not looking good at all. So we might have a smaller recovery here and there, but it seems like everyone is on a panic mode, and unfortunately.
Yeah, and it's again, we see stock markets around the world here today really not loving this. And you got to think, even if you're not the U.S. or China, we see the DAX down, we see the Japanese stock market, the Nikkei down, Chinese stocks, of course. Like, you've got all these stocks selling off, these indices selling off, because again, this seems to be a global conflict now. It's almost like a modern day, kind of announcement of quote unquote war, if you think about it, right? It's like in today's world, it's different times, right? A lot of wars, quote unquote, are fought through proxies, but they're also fought economically. They're fought through trade. They're fought through all these sorts of things. So in the last 100 years, we've had this dramatic move towards globalization, and now suddenly you have this push towards kind of the opposite, right? Everybody tariffing one another. So it's really hard to say how that all ends out. A good scenario, I think, would happen, good for in the sense that things could kind of progress and move positively from here, would be if negotiations began to happen between the U.S. and other places, and tariffs started getting pulled off on both sides, right? If the U.S. is like, okay, well, we'll exempt you if you do this, and then they both kind of like meet in the middle and compromise, those could be seriously positive things. But what we see, again, from the initial response from China is, okay, if you do that to us, we're just going to do it back. And, that's kind of to be fair to the administration as well. That's kind of what they're doing. They're saying, well, you've been tariffing us, we're just going to tariff you back. And now they're saying, well, we're tariffing you in addition again. So we're seeing some interesting escalation is the point, rather than resolutions, right? So escalation versus resolution is really what we're thinking about here. And we see, again, the NASDAQ obviously hates further conflict. And it's weird because, again, this is almost like, Kenzo, it's like an announcement of a war type market move. You get this all of a sudden drastic shoot lower. COVID was also kind of like that. It's this big, ginormous uncertainty, and we don't know where it ends. Just like a major, war announcement. It's pretty crazy stuff.
Yes, and unfortunately, you're right about that. Unfortunately, there will be countries where they will actually try to sit on the table to negotiate the tariff thing and stuff like that. But unfortunately, those countries, they might be too small to change what's really happening, unfortunately. So the likes of China, European Union, and the other ones, they might be aggressive also. But smaller countries, they will think, they will actually see that, this is bad. So let's try to meet actually with the US. And they might resolve that. I saw Trump said, you know what, this will force other countries to sit down on the table, at the table. So, which is good, but it seems like those countries, they won't be those major economies. And even though, if they say Botswana, or let's say South Africa, maybe, for example, that won't change much, you see, because when we check their trade, the imports and exports, they're not really much. Maybe it's less than 2%. So it's not gonna change much on the economy. So, but when we talk about like China, that is gonna be something else. That's why maybe we see NASDAQs, US status, because if you check US, people who trade, let's say who invest into these companies like Apple, Microsoft, they're not only from the US. Chinese business guys, European Union, Canada, all over the world, they also invest in that. And I think that's what they see, and things might get worse, unfortunately. So at the moment it's fine because the market is selling a little bit. When we combine this with maybe within 2 days, 3 days, yes, it's a bigger percentage. But within a day, it's much better because it's 2-3%. But I think if another country retaliate, we might start to see the 9s, the 7 negative on the percentage there. Yesterday, yes, it was a bigger number, but it seems like today it's not going to be like yesterday.
Well, you mentioned Apple, Kenzo, and I just wanted to, just for whether you trade Apple or individual stocks at all, this is just a story to kind of showcase what you're talking about. So China and Thailand, by the way, Apple manufactures a lot of stuff there, right? So this is what's kind of crazy about this is like, and let's say an Apple iPhone is $1,000 in the United States, $1,000. With the tariffs, I heard a discussion about this saying that the potential impact to a $1,000 iPhone could be going up to somewhere between $1,200 and $1,500. And for many consumers, that is a substantial difference, right? $1,000 to $1,500. That really changes the affordability of Apple iPhones, right? Because again, if there is a lot of manufacturing that Apple does in these places, which many companies in the United States, they do their manufacturing in other places, right? So the thought process being, if you can't just say, oh, okay, we're going to do business in the US and then have a factory there. Like factories take years to build. So the trouble for Apple is that, okay, they still have to do these prices. So they have to bring $1,500 iPhones or $1,200 iPhones to the United States. So this is the challenge for these companies. Now, again, there are potential benefits to tariffs. I know it's hard to think that way when the market's selling off like that. There are some benefits. So I don't want to sound completely, negative towards tariffs. Trump is all a big fan of the idea of like how much revenue that's going to produce for the United States and all this and infrastructure build outs. But the point is, in the short run, stocks are hating this because, again, this really challenges. I heard a lot of people talk about how Apple itself could have some serious, blow up potential, some real problems if, the consumers already kind of felt the price hikes in recent years and priced out a lot of consumers to certain goods. $1,500 iPhones, could be a challenge. Now, I don't want to sound like a doomsdayer because, Apple's a smart company. What they might do is they might say, well, we'll make it so that payment plans can be extended at further length. So instead of paying it off in 12 months, maybe you can pay it off in like 36 or something and make the monthly payments much lower, whatever. Point is, higher prices are almost a certainty. The question is whether or not that causes sustained inflation or not.
And the more they start to repeat recession left and right, that also will create another panic in the market. And at the moment, we'll be glued to breaking news, which is not really good, especially for investors. So I think the only thing that is good, I thought maybe, I did not really see the update on China. I thought maybe they were going to go on the table because already they were not fair. Even though the way Trump does things, it seems to be aggressive, but already they were not really fair that much. So I thought maybe they were going to go on the table.
Just to say this, China added in response 34% retaliatory tariffs this morning to the US. So it was they matched the same number right back to the US. Just wanted to say that because you mentioned that.
Yeah, that's crazy. That's crazy. I don't think at the moment the problem is already these bigger economies, they already diversified these companies, Apple, whatever, Nike on a different country, which was good before. But I don't think China was supposed to do that. Unfortunately, this is politics, because if you actually blocking or adding custom tax or tariff on the products that come in from the US for years, and when they do the same thing, you try to retaliate, I don't think it's good. It might look good just because maybe you want to look strong, unfortunately, but that just creates this chaos in the market, and we don't really want that, unfortunately. So for example, if we can just give the example, TikTok, it's a Chinese company, just only TikTok, maybe, and the other ones. But if you go to China, you can't even get Facebook, not even WhatsApp.
Yeah.
And it's been like that for quite some time. But it's funny when you see these politicians argue and say, "Oh, don't ban TikTok 1, 2, 3," but you can't find the same apps in China. You see, I also like Chinese products and stuff like that. But when you check it from, if you are neutral, you will start to see that no, but it doesn't really make sense. There are a lot of stuff which are not really allowed in China, but
Yeah.
Chinese products has to be allowed in a different country. That doesn't really make sense, you see. So it's the same as tariffs.
Yeah, and I also want to just
Yes,
respond to this, Kenzo, to this concept. There are other markets besides the U.S. Asia's massive market. I saw Royal Trade's concept, and these are fair points. Like, I just want to bring these up. China alone is bigger market than the U.S., which is not true. But what are you talking about now? Add Singapore, Malaysia, Vietnam, and India, and you have 3 times bigger market than U.S. So here's the thing, right? I run a small business, and if I were to exclude, let's just say that I completely took out Asia from the sales of my business, right? We run a software company. That would really hurt our business. And let's say for other countries, China, let's say US business is just cut off. Well, you just cut out a huge portion of their business, right? So we need each other. The point is the US is the cream of the crop market. It's the most wealthy, highest spending consumer in the world, right? So countries like China love to sell goods to the United States because we're a huge single-handed country portion of revenue that goes to companies there, and vice versa. The US is able to manufacturing using China. The point is, you can't just say, oh yeah, no, we don't need the US, or the US can't just say, oh, we don't need China. Like, it's a global trade system. Anybody who's not participating in the exchange is cutting themselves short of potential revenue that they could be taking advantage of. So cutting out an entire section, you might say, oh yeah, no, we don't need the US. World doesn't need US. That's foolish, right? Because you're just cutting out 33% or whatever of North America, whatever it is, huge chunk of the consumer. And I actually think that in terms of consumer spending, it's actually much larger than just this GDP. Like, US customers spend like crazy. US consumerism is out of control compared to other places. So that's the point, is we need each other, right? The US is a massive market, and to say, oh yeah, no, we don't need US spending is foolish. Just like US would be foolish to say, oh, we don't need these countries for their supply chains and their affordable workforces for US companies to produce technology. So something to think about.
Sold some premium this morning. IV ranks are as high as I've seen it since COVID. That's not nothing. So I'm taking advantage of that by selling some puts in SPY, puts in Qs. Yesterday I sold puts in SPY and DIA, but I was able to go lower and out less time and make more credit, just because we had a huge jump in volatility. So, take it at your risk. I'm willing to own some of the underlying shares. If you're not, then probably not take these trades, but I think I'm getting a pretty decent deal and pretty decent discount. So that is the plan. So that trade just got posted. So basically I'm going out about 46 days for about $825 of income if the market's going to drop peak to trough 30%. Not saying that we can't, but unlikely. So right now I have this trade. This trade is profitable, close it out for a winner this morning. This trade is a second one that's in for the SPX for the day. And I also have a broke wing butterfly at 5,400. So if we just have like another kind of floating move on the day and price just kind of hangs out, chops around, so be it. I see a big level of support around 5,100 today if the market's going to continue to drift lower. Yesterday I had an interesting trade. It was a butterfly spread at the end of the day. I got in for about 65 cents here and pinned it at 5,400. A 65-cent debit, ended up paying $5.80 at close. That was a pretty wild kind of, perfect trade, which obviously I'm not upset with. So here's some levels that I'm watching. Here's SPX real time 5,100, pretty massive level. That's if it gets there for the day. Obviously the market is down. We've had nasty plunges. I closed out for around 12K in profit. Not that that helps. I'm still down for the year. I officially turned red for this last little bit. Yesterday I was down about I was up still about 25, 30 grand in my account, and now the whole portfolio has turned red. So I'm down about 2.7% year to date, which is manageable considering where the markets are at. It still sucks, and all I can do is kind of grind through it. Here's the dollar, by the way. Finding some balance, right? Dollar had a ridiculous gap and crash yesterday, and now it's fighting back. You possibly are seeing some safe haven flows into the dollar. Here's currency strength. Good Lord. So Swiss on top and JPY and dollar. So risk off flows are pretty obvious. Massive volatility on the New Zealand and the Aussie. Ooh, baby. Let's take a look. Gold, oil, silver, oil. Oh, baby. There's the floor breaking. Okay. We have some wild stuff going on. I also saw that copper is crashing in a pretty big way as well. So oil, floor is broken. I don't know where this is going to stop. Maybe there's a round number support at 60. I've been looking for this potential breakout swing. That's what this yellow box is symmetry down to about $35. It may not happen in a straight line, but it also might. Who the hell knows? But this is now officially, if it stays there, then we have a floor right around 65 that is broken. So if there's any traders out there, a break, retest, and go, if you want to get short oil, structurally it looks pretty good. Unless this is going to be a bear trap. Then the only way that's going to happen is if this thing just snaps back up aggressively, then maybe there's a bottom getting put in. But I say based on the judgment of our prices of the indexes and everything is risk off right now, oil is probably risk off as well. So that's that. UNG still showing resiliency, which is kind of encouraging. Gold at 30.43. There's your pivot on the dollar, and there's your pivot in gold. It's what I talked about. Just said be aware that this is likely going to have a correction. What's the factor? Could be timing with the Q2 starting. Could be a pivot on the dollar. Looks like that crash yesterday kind of pivoted the dollar, and now gold is selling off. I don't think this is a bad thing, right? I mean, this technically has been long overdue, so I'm kind of happy to see it. You just don't know how nasty this is going to get, right? So, I mean, levels to watch on gold would be in the near term, previous levels here, previous levels here. I, for one, am more excited about like the 144 to 200 pullback zone. I like to see gold at least try to get to there. Try to get to there. So not a bad play. Do I want to short gold? Probably not. I think I'm trying to keep positions pretty close to the vest right now. Don't need to do anything stupid. I had some profits running all year through all this chaos, and officially turned red today. So it's now, protection. I've got a lot of hedges. I closed off some profits today on a synthetic short, and that's fine. I've got some hedges running in futures, which offer massive reward to risk. So right now, my futures trade, I've got a position for futures running for about 30K right now. So that's good. I've got another one for 10K. That's good. So I've got about $40,000 in hedges, which is fine, but that's not enough to offset, what I'm currently dealing with, right? So I can take the profit. It still doesn't mean there's not more pain ahead. The nice thing is with these trades, these are kind of the just in case black swan. If we're going to, 5,000 on the SPX, if we're going to 4,900, 4,800, those are probably the technical levels that I'd say, yeah, I'm gonna start looking to lock in some profits there. So if I go SPX for a moment, we're trading at 51.71, right? We have August lows back here on 51.25. I mean, this is insane. This really is. But I've got to say, this is why I talked about the floor at 5,500 being so important. If we don't hold this floor, there's nothing stopping this market, right? There is no support here until this low, and I don't think the market gives a crap about those lows because that previous high is way more important resistance. So to me, if you're lucky right now, the bulls would come back and just try to find a gap here before they sell off again, if you're lucky. Otherwise, this could be just, buckle the fudge up for Monday. Think about the futures flows coming into Sunday night. If it's going to be like another monster gap lower, having 1, 2, 3 ridiculous days, it might be literally one of the worst sell-offs this market has ever seen in a short amount of time like this. Maybe. It could be the equivalent of like a 1987 type move. But if I look at where this is at, if we did crash down to like 5,000 or 4,900, I'm taking a stab at least at some type of retracement. And maybe this is where the Fed can I don't know. There could be all sorts of crap happening. Like the Fed could be ready to step in. I don't think Powell's going to say anything about it today. But if we dropped another, 300 points in a day, and we're talking some severe damage done in such a short amount of time. This is pretty wild. You know, if the market's halted today, that's probably a problem because it's going to resume selling. So this is not done. This pain is not done. I'm just telling you, be careful.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.